We've been interviewing top economists and financial experts about the outlook for the economy and the stock market. Today we're speaking with Adena Friedman. She's the president and CEO of Nasdaq. Adena, thanks so much for talking with us today.
Sure, it's great to be here.
As the CEO of a major company with thousands of employees around the world, what's been the biggest challenge of working remotely and then now planning to try to bring people back into the office?
The first challenge was really understanding the situation well enough to be able to make decisions that were the right decisions for our employees. And we were very fortunate because we had done a lot of business continuity planning over the years, and we did in fact have a pandemic plan. But even though you say you have one, it doesn't mean that if you've never experienced it before, you don't really know how effective it is. So it was a very challenging time at first, just taking in the information and trying to make the right decisions for your people and for the business. I think then making sure that people did adjust to working from home, since we'd never done it as an entire company for more than, let's say, a day. It really was important for us to understand what worked well, where do we need to bring some extra support in. And then, of course, now having been at home for several months, how do you work with your clients successfully? How do you meet new customers when you can't meet them physically? How do you develop those relationships, as well as making sure that we continue to execute for our clients on our software business, on our data business, and in the markets?
You have businesses all around the world, and each country is at sort of a different phase of the reopening here. So how do you balance the differences in what's happening in Asia versus Europe versus here today?
Yeah, we are making completely local decisions around each of the offices. So our senior leadership team, along with our risk management team, we meet 3 times a week, first thing in the morning, to understand what is the status of all of our offices. What's the state of the virus across the world? Do we have to change any decisions we're making in terms of having certain offices be available to our employees? We've been very methodical about opening offices, very flexible about managing the state that they're in. And then we have decided on a global basis to make it completely voluntary for our employees to choose to come in or not, at least through the end of the year.
I have to ask you about the IPO market because, of course, that's a huge part of your business. It obviously sort of froze up in the initial uncertainty around the pandemic, and it seems to be coming back to life. What's your outlook for that?
Certainly, the IPO market came back more quickly than I would have expected back in April. But when you look at why, so there are a few things. One is the companies that came out right in kind of the May timeframe leading into June were in the healthcare, biotech, so leaning in on innovation in biotech as well as technology innovators. There's a very healthy pipeline of companies looking to tap the public markets. There's a lot of capital to be put to work right now. And so we continue to have some optimism that will continue. And then probably take a pause around the election. That's the time of uncertainty. So usually in an election year, we see fewer IPOs around the election.
So we've seen some of these big tech stocks really have a huge impact on the overall markets. Do you worry that a few companies and those big tech companies have an outsized impact?
Well, I think it actually, if you think about very large economic cycles over long periods of time, you see if you look in the past, you had the rise of, let's say, the railroads. And that was really, the railroads were paving the way to a much bigger economy. Right? They were really changing the economy around them. Then you had, of course, the rise of oil and how that really gave rise to global industry that really changed the economy and the world around them. And in both of those cases, the companies that were really leading in those areas became the largest companies in the countries where they operated or in the world. And I think now we all know that technology is really driving the future of our economy. Things like consumer convenience went from being convenient to being necessary, and software that really powers a global organization, and certainly a distributed global organization, went from, God, that's nice to have, to I really need to have that now in order to operate my business. So I think those global trends will continue, and as a result, the companies that are really leading those trends are the ones that are becoming the biggest companies for good reasons.
So no concerns that there's too much hype about this, or bubbles like the .com era.
If I were to compare it against the 1999 period, back then the Nasdaq 100 had a price to earnings ratio of 150 times, and there were companies being brought to market, very immature companies that really were very, very early in their life, coming to market and getting very, very high valuations. Today, the Nasdaq 100 is averaging around 30 times, and has the the 5 largest companies in the world included in it. But it also, the minimum market cap for the inclusion in the Nasdaq 100 today is at least $15 billion. So these are large companies with incredibly strong operations that are growing and driving the economy forward. So it is a very different time, but there is certainly, you can see that investors are leaning in.
One of the kind of side effects of this pandemic has been that companies and countries are looking inward and thinking about whether they should have supply chains closer to home or move technology closer to home. What's your view on this sort of deglobalization idea? Is that really going to happen?
On the one hand, there's this desire to try to bring certain critical manufacturing back to our domestic countries, and on the other hand, you face the reality of what does it really take to do that? And we have established over decades a global ecosystem that works well up until now. So then it's a matter of, well, what's the long-term need versus the short-term need? And if it's really a long-term need, then I guess people will start planning to do some more, bringing things back closer to home. I also think that it's a shame if we really abandon the global ecosystem we've created, because it has actually created jobs all over the world. It's lifted a lot of economies around the world. It's made us a more global citizens. And in many respects, up until recently, I would say that it's really allowed the world to operate in a more unified way.
You've been a big defender of capitalism and how the free market, markets allocate capital. And one of the questions being raised now is if there's been too much intervention, too much money flooding the system. Is that something that you worry about in general going forward?
Well, it is a great question. And I think it's going to be that money quarterbacking in 3 or 4 years. We're going to look back and say, did we do it right? We've done it differently. And I think that's absolutely the right evaluation to do in 3 or 4 years. But right now, as we're managing through this, we again have to use the information we have in front of us and try our hardest to stave off a long-term economic crisis. And so having the government be strong, having them be swift, and having them commit the capital that we think we need right now, I think is really, really the most important task.
We have seen in this crisis just enormous amounts of inequality. How can capitalism help address some of these inequalities? What's your solution to that? I know you've talked about this term, cooperative capitalism.
Companies have a responsibility to play a role. The government clearly has a huge responsibility in playing a role and trying to eradicate this level of inequality. But I don't believe that the answer is to try to have the government play the entire role. I think that it's a cooperative role between the private sector and the public sector. And when you think about what does the private sector do really well? The private sector innovates really well. The private sector comes out with new ideas, new products, new services very quickly and nimbly, because they have access to capital quickly, they can capture the imagination of investors quickly, and they can put people to work very quickly. And so that's a great engine, and you want to keep that engine running. I actually think another thing that companies can do is equity ownership. A lot of companies, for a period of time, equity ownership was a really wonderful wave that was coming through corporate America. And then suddenly it didn't. Part of that was actually because the accounting rules changed to discourage the use of equity as a form of compensation to their employees. And it really did change companies' decisions. So at Nasdaq, we are proud of the fact that almost all of our employees are equity owners. But if you do that across all companies, then that spreads that opportunity for wealth creation to a much broader part of the population. And then, of course, then the public sector. The public sector has the benefit of having massive resources, being able to set education policy and make fundamental different changes in how we educate our citizens. What if you thought about the private sector bringing that innovation and the public sector bringing those policy changes together? Imagine how much change we can affect. So that's the idea of cooperative capitalism.
Plenty of companies have made pledges about tackling inequality. What does it take to make it actually come into place?
Well, if I were to say, what's the number one way to make sure that I focus on the long term on how to continue to make a positive difference for our community, our employees, and the communities around us, is having investors ask me about it every quarter. So, the investors have an enormous amount of influence. And I think investors today, the ESG movement in the investor population has made a difference and will continue to make a difference. If anything, the momentum behind that is increasing. So I do think investors can continue to use their voice to say to companies, this matters.
Any kind of bright spot that you're really looking forward to going forward?
I certainly think that the biggest bright spot that we could create for ourselves is is a society that has more equality, that addresses some of these deep-seated and very long-standing social justice issues. And I really mean that. I think that I am as optimistic as I've been in a long time that we can actually effectuate change, and we can have a pretty consistent view of that over time. So that's, to me, the biggest hope. I think the second thing is that if we actually find new ways to work and be more flexible as employers, and I think we have to be careful in finding the right balance. But if we can find more balance, then I think we can also create a different work-life balance for our employees over time that can be more sustainable. So I think those are the two things that I'd like to see and that I am hopeful about.